Hit the bell now. Hit the bell. Producer AB, hit the bell.
3, 2, 1, 0.
What's up, guys? Happy Friday. It's the end of the week, and this is Get Technical. I'm Neil Hamilton. Everyone smash the like. Producer AB getting that rocket ship hit at 9:30 a.m. Detroit City time for the open of the trading day. What is up, everyone? The first thing I want to talk about today is Apple. Good old Apple stock. The stock that I saw a wonderful opportunity to get into right before the rotation. Years I made money on this stock. Years this printed shekels for your man. And then the moment I decided, you know what? I'm going to pile in a little bit. Boy, did I get owned. And it was a lesson in making sure that you set a trailing stop loss on your long-term holdings because I expected a breakout to all-time highs. And I got wrecked on Apple very recently. Right there. Again, right here. Yeah. So thanks, guys, for hitting that like. Remember, if we get the likes up to at least 250 on the video, 250 on average for the week, we will do a Saturday special stream. Trading Grounds, Brad is here. Brad! Hey, Brad. So I want to answer the question today, is Apple stock a buy? An interesting question, because that can mean many things to different people who are trading or investing on different time frames. So I'm going to answer this question like an investor, which I am, which I hope many of you are. Some of you aren't. Brad, this guy right here, not really, not in stocks. This guy is, end of the day, get rid of it. And Brad, correct me if I'm wrong on that, but I think for the most part, you are a true blue day trader, scalping options. And thank you for being here, by the way. So I'm looking at Apple like an investor. So the first thing I want to do when I'm looking at a stock like an investor, Apple is just the absolute poster child for an investor stock, right? Like this is a name, and I that was a dumb statement, but this is a name that many people have had in their portfolios for a long time. That's what I mean. The first thing I want to do is put on my 50-day moving average. That's the investor's friend. That's the tried and true. That is the what shall we call that? That is the pirate's parrot. That is the cowboy's lever action rifle, or horse maybe. The lever action rifle is more like an exponential or the fib tool. So at any rate, I'm looking at this, and as a trader, I would have loved to enter right when we crossed this line that I'm drawing here. I'm drawing this line from this previous high. I'm getting my paintbrush tool out so I can illustrate a pattern that resolved. This thing that looks like a little apple bottom on Apple, Alpha Alpha Papa Lima. Let me move this over so you can really see it. All right, that's your double bottom. That's when traders they could see this. Traders knew that a reversal was on the way. And when we crossed this line, that was a time to get aggressive on Apple stock and start targeting something like this 50-day moving average, which lines up perfectly with this pivot point right in the middle. That's the butt crack of the double bottom pattern. That is not the technical term. That's what we use on this show. All right, so that was a nice entry. Let me Control Z that last line I drew because that's not helpful. Now, when I look at this stock as an investment, it is a good investment as long as it stays above the 50-day moving average. The company is good and has a huge cash reserve for doing research and development, bigger probably than any company on the planet. And they're already indicating to us, unlike a stock like Intel, who hasn't indicated to us what their future investment is, how are they diversifying their product lines, getting into new markets. Apple has been indicating to us for a long time that they're investing in self-driving cars. And self-driving cars, if you've been paying attention to the markets right now, are a very, very hot space for investment. Stock prices climbing all the time. They are the future. So I have no problem saying that the moment that Apple crossed above the 50-day moving average, reclaiming it from this little dip period, that it became a buy for investors. I own Apple stock, full disclosure. YouTube clip. All right, let's get to the stream. So you, yeah, I mean, if it's Apple, you bet your ass. 13. All right, so let's take a look. That was for the YouTube kids. All right, so let's get over to Twitter. I got Twitter open here. Thank you all for responding to the tweet this morning with your picks. Got some awesome picks in here. First one right up, D Norton, first to bat. And actually, is that a baseball? No, it's a football. Oh man, I thought I had a pun. Whatever, sports. Let's look at gold. Let's look at GDX, which is running. Look at GDX right off the giddy. What did I just say about the 50-day moving average? Look at us now. Look at us now. So GDX, let's look at this over a longer period of time. I'm just using the 50-day right now, and then we'll get into some Fibonacci levels. Right off the giddy up, there's one thing that you need to notice. Let's use our linear regression tool and see if it does it for us automatically. Yes. This whole period is a confirmed downward trend. We had a nice, like, kind of starting right here, upward trend, and then we pivoted. We were in a confirmed downward trend. So in a downward trend, and you would like to go long on something, or are looking for an opportunity to go long on something, what do you need to see in the price structure? Yeah, Doge is crazy. I did a Twitter poll this morning to ask if you guys if we should start covering more cryptocurrencies and not just like Bitcoin and Ethereum and Doge, but like everything, whatever's hot. And you guys are pretty split, but I think we're going to, because I didn't actually care what you guys said about the poll. I was going to do it anyway because I like it. At any rate, we are in a confirmed downward trend here. You can see the 50-day pivot. However, but when that happens, you want to look for some sign of a reversal of trend. And I think we got it. So let's get rid of this linear regression. I'm going to keep the 50-day up while I illustrate another bottom. We've got ourselves a double bottom reversal, extra bullish because the right butt cheek is higher than the left. Always good. That's probably the side that this person puts her wallet in. That's bad for your back. That's why digital wallet stocks, a great thing to look into. Check out digital wallet stocks. All right, so we're looking at GDX. It was a buy when it crossed the 50-day line. Straight up, Mr. D Norton. Now the question is it still a buy? All right, let's box it in. Let's box in our pattern here. Let's do it this way, and then we'll do the Roy way with our fib lines. I was getting all funky with the Fibonacci last night and this morning after yesterday's lesson, which if you haven't watched it, go to the Benzinga YouTube page and go to the Get Technical playlist and watch yesterday's episode, which would be the Thursday, April 15th episode. Great guest lesson on how to just forget about every single tool that exists and just use Fibonacci retracement, and trade options. Absolutely fantastic. And if you watch closely, this guy that we had on yesterday only trades I think it was 20 to 40 stocks or something like that. He was giving you the stocks because they were on his chart while he's trading them. So there you go. All right. So I'm going to bring this down to the meat of the trade, which is right about here. I'm not going to do this ocean spray stuff, right? I'm going to do it where this found support and it lines up with the top of the body of this candle on the daily. So that's our boxed in double bottom reversal pattern. You can do the same thing that I did with Apple for a second, which is go to the swing high down to the butt crack, and you can find that line, when we draw that sloping line of resistance, lines up perfectly with the moment that we cross the 50-day. Pretty cool, right? Pretty cool. But we'll get rid of that. Let's just use our moving average for now. So the moment it crossed that, it was definitely a buy. Then the moment that it closed above, which it did here on April 6th, closed above the neckline, that was in the meat of the trading here, like this level is confirmed by other levels. If I go back, so actually I went forward in time, so that was disingenuous of me. If you go back, you can find that level being confirmed by previous lows. If I go back further, I know it does. At any rate, you don't want to get thrown off or wait for the absolute high here. You can be more aggressive and go where the majority of the trading is. You can also use your volume profile tool to see where the majority of the trading is. So let's see if this pattern has resolved. Double bottom, absolute low to neckline. Added to neckline. Still room to go according to the pattern. Now, will it be a straight journey up with GDX? Probably not. We're already on a red day, so we know we're taking the stairs up. So let's get an idea of what those steps are going to look like. Let's get an idea. I'm going to get rid of this box. You guys already know it's a double bottom pattern. Let's get the Fibonacci extension or retracement. I always mess it up. Tool out. Let's do a couple things. I'm going to do it a couple ways. I'm going to find a way that works well. So we're going to go to the previous swing high, the really swing high, and then go to the absolute low here. Notice the 78 line on my Fibonacci tool lines up perfectly with my pink resolution of the double bottom pattern. So here's what I got to say about this. We just got some additional confirmation that $37 is a nice price target if you're bullish on the stock. And you have reasons to be bullish because we've crossed the 50-day. We have reversed from a downward pattern. And then let me pull up the 20-day, pull up the Bollinger Band. And if we look at this red 20-day, you can see that we've got a nice little curl upward. Now, this is already a higher high than our previous swing high. Just don't want to get faked out. Just don't want to get faked out. So I would say watch this closely to make sure that this downtrend doesn't keep continuing, because there's a little bit of a double bottom here, and you can make the argument that the same thing is happening again. So this is waiting for confirmation. And what is that confirmation? I want to see a close above this line right here, which I will draw further across. I want to see a solid close above 35.78 and make sure you're setting your stop loss around there to go bullish. And that's profit potential from that level up. Get my can someone at Trading View and tell them to make their tools work? Sorry, Pierce. I love your platform. That's 3%. This is options. This is options, all right? And I have no idea what the options market looks like for this. But I think you've got some room to get up here. I think you will hit a little bit of consolidation. But if it breaks through 37.17, sheesh, you might be getting back up to about 38.99. That's gold. It does look like a reversal. So Norton, I think that you may be onto something. Or D Norton. I'm assuming your first name is Norton. All right. So yeah, Joe, you're on gold. So we kind of already covered gold. So thanks for getting in. Time frame for recovery on Square. So tough you can't really time into the future, right? Like if you're asking for a time frame for a recovery, which I assume is to erase losses from this recent correction that we've had, and return to all-time highs. So let's go ahead and delete everything. We're looking at Square here, which we know is hot. If you guys have been watching the show, you know we've been talking Square. Producer AB, your camera just turned on, I think. Producer AB, what do you think about Square when you look at it?
I see a little modified V pop there at the end.
Yeah, it is.
Well, not the very last part. That's obviously the start of a downtrend. You see some red candles, but not a downtrend, but the starting to drop off a little bit. But yeah, that V right there is first thing that I saw.
Yeah.
Where is that high before right there? Is that it's like previous all-time high?
This one would be the
there.
previous all-time. Yeah, about $283.
Okay.
Yep.
Personally, I'd like to see it start curling back up a little bit more, but then I think we could easily see it back up at that level at 280.
I hope you don't mind that I said they're.
I don't disagree. Luke, too loud. All right, so let's get them out of here. Luke and producer AB have a little bench with like paintings of birds on it and stuff that we got it at a thrift sale. It's really cute. They sit together at the bench, and that sometimes they share the laptop, and it's adorable. The Benzinga office is really something. You guys should visit. It's in downtown Detroit. So anyways, we've got a double bottom here, which really, I mean, depending on like producer AB in Michigan, he's a Michigan boy. In Michigan, we call this a double V for Vendetta. And what do you know about V for Vendetta? It's about getting revenge. And that's what we're doing here. We're getting revenge on the sector rotation. This is a revenge on precious metals and traditional energy, like oil and stuff. And I think we're watching that unfold. Hugo Weaving, great performance here on this stock. Let's go ahead and take a look at the 50-day moving average, and you can see that we reclaimed that. Look at how that crosses. It's so cute. It's almost as cute as that little bench that Luke and Aaron share. And we tried to get them a little training potty to share. But Luke wanted to, but producer AB was not going to do the little trainer potty. I don't know why. I think it was too small. So at any rate, look at that. Look at that. All right. Can you believe Natalie Portman shaved her head for this? So we're looking good having reclaimed the 50-day. Now the question is, when will we get back to our all-time highs? I mean, anyone can say. But we're in a good spot right now. We pretty much resolved this pattern. Let's box it in. Let's box in our little double. Let's go with the meat of the trading, which I'm going to use this open right there. Yeah, it's like right about in there. That's the meat of the action, right? And I'll bring this down a little bit lower because this actually is a sloping wallet in the right butt cheek pocket pattern here. So let's look for the resolution. Bottom to the meat of the trade. Added to the neckline. Sheesh, got some room to go. But let's check another thing. Right butt cheek to the top. Added to the neckline. Sheesh, got some room to go. Now let's use something that I don't think Roy would use. But it's the Fibonacci. I don't want to use this one. Let's just use the Fibonacci extension. Let's go to this absolute high to where our little downtrend started. And let's go to the absolute low. And you can see that's where we opened today. We opened, yeah, we're open. It's 9:47. I'm tripping. We pretty much opened here. We got stopped a little bit. Here, let me zoom in on this. Right at that 78 line. So what I would be looking for, my friend, is at about 6. I suck at these levels, dude. Just the one with a 6 in it, okay? If you're looking for a move like this, probably a bounce down to the 6 and watch for that bounce. That's at 248.5. You're looking for that bounce and you want to reclaim this, and that is probably what your corrective phase will look like. And then on that corrective phase, you can treat it just like a bull flag. And you can add the swing high measurement or the measured move to your breakout. So lining that up. Ooh, I might be able to I'm going to do some pseudoscience for you guys. All right. This is absolutely pseudo. I'm going to do the swing high to swing low so far. Absolutely pseudo. And then I'm going to add that to this potential breakout point. All right. This is not, guys, don't flame me for this. Don't flame me for this. But I think the breakout, no, I don't think the breakout could occur on April 21st, which hopefully that's during the week. Yeah, it is. That's next Wednesday, taking you back to the all-time high. So you asked me to time it. That's me attempting to time it. That might be the breakout, and that might be time to entry out of this sloping line of resistance. Yeah, momentum is definitely on your side. You can see the MACD is above 0. However, it is starting to curl down a little bit, but that's because we got these red days. We're in this little corrective phase. Corrective phase doesn't mean correction. It just means taking a breather, setting you up for a great entry. So that's Square. That's my take on Square. Yeah. All right. So let's take a look at the next one. Scout mode. All right. So I don't know what this means. Scout mode. Does that just, I don't know. I just liked it because he winked at me, or they winked at me actually. All right. CCIV. This is a SPAC, right? CCIV. Yeah, this is a SPAC. No, this is the Lucid Motor SPAC. Wrong show. You want to look at PayPal too? We should look at PayPal. I'm just looking at that because it's a pure Square. Same sitch. PayPal's doing the same thing as Square. Same situation. Same shit, different ticker. All right, so we got AMD open here. Let's open SQ. I want to delete my drawings. There we go. Looks like identical, doesn't it? So there you go. Okay, so next up, you guys are putting tickers in chat, and I love it. I love the moxie you guys got, but tweet them at me. So we can do this in an orderly fashion. So you're thinking buy the dip in a more bullish pattern? Yeah, because it is hitting support here with this previous resistance. And forming like a full double. We got a full double here. So if you look at PayPal, you try to box it in, we don't got like a nice, beautiful double. But if you're looking at Square, wait, you want me to look at PayPal more bullish pattern? I like Square more. I like Square more because I think the pivot was higher. My humble opinion. Don't post this video on Reddit. Okay, so we're gonna look at Kim on the daily. KIM, Kimco Realty. Okay, let's go. Very, very easy one to call out using the 50-day. Buy on the bounce. Let's get up our Bollinger Band, which has our 20-day. Looks like it bounced off the. Look at that thing. Absolutely gorgeous. Opened at the mean here, the 20-day moving average, bounced off like a mofo. This one's trading in trend. This one I would use Bollinger Band, use your 50-day moving average. You can use another moving average if you like it better and you think it's tighter and it seems to react more to that. But this is just a quick 3-minute look at it because this is a YouTube show. And I would say you can trade this thing every time it touches it and you get a confirmed bounce. So not when it's red and it's touching it, but the second that it's green and it shows that it's going back up. That's how you play that. And that's on the daily. I'm sure you can day trade. I mean, this thing's in an uptrend. Great for day trading things that are in just solid channels, which this thing would appear to be in. And then as far as timing it, looks like you're at the end of an impulsive move. Potentially. It's got some red tickers in here, so you could keep going. Let's go ahead and draw our line here at this previous impulsive move. Looks like you got some room to go. Let me open up the Bollinger Band one more time. However, it is a bit extended here at the Bollinger Band, so you might get rejected by that and a return to the mean. We shall see. This support will probably want to hold, so make sure you're watching $19.85 on that stock. And if you get a bounce on this, totally fine to go into bull mode. It just hasn't had a great consolidative phase or like any very clear pattern. So tough to say. This is, a V for Vendetta, which is highly elusive, but good stock. Oh, let's zoom out. Okay. I've made the classic mistake of not zooming out and looking at more time on the chart. So let's delete everything really quick. Bollinger Band goodbye. And let's do our due dill on this thing. All right, we've got something we got to box in, which is this double with the slope. Wallet side on the right. Looking for resolution at the absolute low. Up to the neckline, which is right about here. Added to the neckline. Turn it sideways. Room to go on that. You're going to hit resistance here for sure. Going to hit resistance here. Break out from that resistance. Sheesh. Look at that. How far does that back? Yeah, multi-year Sheesh, multi-year resistance. This thing, if it breaks out, you might have something big on your hand from a swing trade perspective. So what can be done here is we just switch to a weekly. We get rid of that little box. Look at this from a longer time frame, and we get our fib. Go to the absolute all-time high to the absolute low. And I don't necessarily like the way that looks, but it is lining up well. So let me bring that up a little bit. Let me tighten it up on that all-time high. Boom. Then what we do is the all-star charts JC Peretz square instead of just a line, because we're talking about such a long time frame. It can be within a few bucks. This is sort of the resistance zone. A breakout. I mean, a breakout above 2045, you're gonna watch to get stopped. You're gonna watch to get stopped at 21. So that's like a buck difference, right? Yeah, it's like 50-cent difference. But a breakout above 2106, sheesh. That's when you're watching for bigger moves. So that's where I would start targeting previous highs upon a break from this. But remember, the resolution of your little Dublevet pattern is about 22. Thanks, Jason. All right, 9:56. We got 4 minutes left. Let's get to the next stock. ZZF. RAZZ. F. All right, next stock. We're going to look at IMMP IMP for my man John. Tried to do LMMP. Wait, didn't we cover this? You want me to look at it twice? Or did I do this later? I feel like I responded to your tweet. I'm not sure. I don't remember. So let's go ahead and delete everything. This one's pumpy. Very pumpy stock. This is a day trader stock. We got into this. This is, yeah, it's biotech, pumpy. These big spikes are pump and dumps. Little FDA things. CEO was seen holding hands with Natalie Portman on Hollywood Boulevard. This thing's going to spike up on all kinds of little fickle things. Tough one to trade from a swing trader perspective because we're looking for more consistent price patterns, price structure. However, you may and like look at how high this thing has previously been. Tough one to say. Here's what I'm going to say. I'm just going to be honest with you, bro. This one's not my style, and I don't have anything very meaningful to say about it. If you want to look at it from a day trading perspective, which I wouldn't do with this because I doubt it has any options. I would rather, like, when I day trade, I like to scalp options. You can pick two moving averages exponential on 10, 5, 1, whatever chart you like. Pick your poison, and you can look for crosses as buy and sell indicators. That is just kind of how I do it. This one's just not in my wheelhouse. All right, so we got 3 minutes. We can get one more in here. EXP I capital L, yeah, I. Ooh, this one. This one's going to be a yikes for me. This one might be a no-touch zone stock. For the oh wait. I'm still on the 10-minute. It's still kind of the same thing. So looking at this thing for a potential recovery, not out of the question. Nothing's ever out of the question. The first thing I'm going to do is draw my lines of resistance from this absolute peak. I'm going to draw it. Yeah, let's do that. To this little swing high. Yeah, no, there's no point in doing that because it's a race to the bottom with this one. Let me know if you're in the chat right now. Let me know what you see in this. Did someone in a chat room tell you about this? This is EXP World Holdings, which does. Oh, it's financed. Okay. Let's see how this compares. Let's do EXPI against the financial ETF, XLF. So it's weak against XLF. It's weak against the S&P too. Not my kind of stock. All right, guys. Sorry, I didn't have like a big bullish explosive stock for you to end on. I do think Apple is an entry. One thing I'll look at really quick, as I said I would, is AMD. I like AMD right now. I think AMD, I mean, right now it is down for the day, but I like AMD for a reversal here. We shall see. As long as it's holding the sloping line of support, I think AMD could be a buy. And that get this entire journey back up to the previous all-time highs substantial. It's 22%. So that's one that I'm watching. I did really well, made a lot of money with AMD through 2020, but I mean, who didn't? Look at this run. It's almost like what Home Depot has been doing. Look at this damn thing. Absolutely gorgeous. Absolutely gorgeous. I kind of felt like AMD was like that, but even less tight. At any rate, we have a very special guest for you today. Everyone, smash that like, put your hands together for Anka Metcalf. Producer AB, let's bring Anka onto the show, please. Anka.
Hi, Neil. How are you? Good morning, everyone. Happy Friday. Happy option expiration day.
Yes. I was seeing some folks are talking about that. Could you explain to folks what that means?
All right. So typically, price action on option expiration day is when options expire, the monthly options expire. And typically on option expiration day, you're having a very choppy price action. So I've been trading for a very long time, and I have noticed that typically in the morning, if you have a very dynamic morning with a big burst of momentum into stocks, then you're going to have a very sideways and narrow afternoon. Typically, the specialists are pinpointing the stocks at or around whole number areas, or guess what? Fulcrum levels. So a fulcrum level would be considered that 0.50 or that 0.20 or that 0.80. So these are the 4 price points where they like to nail that price. And typically the option expiration week is relatively difficult to trade, and the price is literally haywire. Usually Monday, Tuesday, Wednesday, the price action tends to remain sideways. On Thursday, it tends to pull back more if, for example, the stock is into an uptrend. And then on Friday, it tends to peak up a little bit and then trash. It's exactly what's happening in the market right now. And it's so expected. I like to swing trade. I don't day trade stocks. There was a time when I would day trade stocks, but I don't day trade stocks anymore, but I look for swing trades. I typically don't like to initiate swing trades on option expiration Friday because the following Monday, it's called Calibration Monday. So what can happen on Calibration Monday is basically they're shaking off all the price action that happened on Friday, and then you're finding the true trend, the true colors of that particular stock. It's very difficult to trade option expiration day, and more difficult quadruple that we just passed. But thank God is behind us right now.
That was the witching day, right?
The witching day when everything expires, futures, everything, futures contracts, stock options, indices, etc. Everything expires.
Yeah. You know, Anka, when you were, I think, the only person, I mean, witching day, a couple folks mentioned it, but you are the only person that comes on the show and really talks about these events, these market-wide events, and how they affect the markets. And it's so insightful. So I love hearing this stuff from you.
Yeah, and it's very interesting because they all have a typicality. So for example, not necessarily option expiration or window dressing or January effect. You should bring me on in December because I have a lot of things that I could talk about. The Santa Claus rally, window dressing. There's also the January effect that I actually love to trade. But typically, you have to pay attention through these times throughout the calendar, throughout the year, because they're very interesting to observe. And they give you an insight on how you can, I would say, trade for that day or for that week. For example, Easter. typically any holiday is bullish. It's almost patriotic, right, to go long on a stock, and especially Memorial Day is coming up, 4th of July. If you go back in charts, you're going to see that most of the indices are trending higher going into the holiday, before the holiday and after the holiday. And then typically it lasts for 1 to 2 days after the holiday, and then the market just shakes up all that event. And it, whether we're in full swing earnings season and fundamentals are going to start kicking in, or different events are going to start, taking control of the market. Fundamentals is actually my favorite because I really am not a big fan of a news-driven market. That is risky. That is a lot more difficult to trade. It is tradable, and that's where the velocity, and that is where typically all the volume is at. And volatility. And you guys that trade options, I don't trade options, but you guys that trade options, you love volatility, and this is what you live for. So yeah, there's a reason why the market keeps on going up, because it depends on the trend. Because if the trend is, for example, for higher, the market keeps on continuing higher. Why? Because there's very low volume. They're not turning on all the algos, and that's the reason why you're not going to have the whipsaw anymore. So it's going to be a pretty smooth sailing. There are going to be a lot of retail traders that are trading, and a lot of institutions that are not algo driven. That are going to be trading the market. So that's very interesting. So this happens every single time, 2 to 3 days before any kind of holiday, whether it's Easter, we have Memorial Day coming up, we have 4th of July coming up, we have all the holidays that Labor Day. I can't think of any other holidays because we don't have a lot of holidays. Yeah, but compared to Europe,
Yeah, I can't think of any other holidays either. I'm terrible with holidays though. So that's I like you come on, you remind me that I got to call my mother on Mother's Day. You remind me that Easter is coming up. It's very, very, very helpful. So Anka, I would love it if you wouldn't mind sharing your screen and just giving us an idea of how you're looking at candles, how you're using your lines, and setting up your swing trades.
All right, let me just start sharing. Okay, I don't know which monitor I'm sharing right now, to be very honest. Okay, I got it. Okay, not so hard. Okay, so you guys can see the, okay, perfect. Now I can see it. Awesome. All right, so this is, these are the spies, right? Okay, so the spies, we could talk about two things right here as well. We could talk about the spies, and we could talk about NASDAQ, which I think is very interesting because, Neil, I like to talk about things that are happening in the market. And we have just snapped out of that really creepy March that was a non-seasonal month for NASDAQ. And now we're just going with the flow, and NASDAQ caught up and it's making new highs. All right. So I use bar charts. I love to use bar charts. And the reason why I use bar charts is because I can read momentum very easily. And based upon the shapes of the candles, I can read whether there is buying pressure, selling pressure, whether the bulls are in charge, the buyers are in charge, or whether the bears are in charge. So for me, it's very easy to gauge that off of these candle charts. Another thing that I use is basic support and resistance. So I'm looking at supply and demand. I'm looking at support levels at the bottom. I'm looking at resistance levels at the top. I use fibs, and for this example, I had here because I've been having this for a very long time. Actually, I've had this on my chart for a very long time. This is the pre-pandemic swing high, and this is the pandemic low. So when the Fed started to pump money into the market, this is the low that we've created back then. And we started to move higher. And as you can see here, we are basically right now trading into the 168.8 level, which is actually a big resistance and a big target area. And actually, I'm very surprised that the price is not literally reacting, and it's not pulling back just one iota from this from this high right here. We do have another extension for higher. This is, of course, for longer time frames. So when you're looking mostly at quarterly charts, when you're looking at monthly charts, I'm coming from the institutional side. So I'm analyzing annual charts, quarterly charts. I'm analyzing monthly charts, and then I'm zooming into the weekly charts so I can develop my swing trades for developing my swing trades. But we have a wide tradable void here. I'm not saying that it's going to go parabolic, but this is the next projection that I'm seeing in the market. I'm not seeing any devaluation. We have a pretty good start to earnings season today. This morning we had Morgan Stanley. I haven't looked at the stock right now, but we can take a look later. Morgan Stanley is still strong. I'm still looking at financials, and JP Morgan, which reported the other day, is trending higher. So we have very strong financials. And as you guys know, financials make a big part of the SPY. So they make a big part of the SPX. Whenever we're having strength or relative strength from financials and from the energy sector, from oil, typically the S&P is following higher. So these are two very good indicators that I watch. I don't use a lot of indicators. I do use volume because I want to see especially how many participants are in the market at the time. When I particularly want to initiate the trade, I want to look at the volume. Is it constant? Is it moving higher? Is it descending? And typically today, you can see that the volume is a little bit lower on the weekly structure and also onto the daily structure. It's still a little bit lower. Take a look at the volume today. And that is because we do have the option expiration day. And not a lot of investors are involved in the market today. Today is algo land. If you have looked at the price action that was, for example, on the 15-minute chart, you can see the big drama. So they tricked everybody into going long and then boom, pullback. But this pullback is coming in. This is another thing that I would love to talk about because this is the absolute best indicator that I use that is deriving from price action. And that is the minor support and minor resistance area. So what these areas are, minor support and minor resistance, only develop in very powerful trends, and they are a confirmation of the continuation of the trend. So they're so much more solid than any kind of double bottom, than any kind of double top. They are the way to trade if you're trading the trend. So what do I mean by that? I'm going to use a price line here so I can show you. For example, price is trading right now into the 416, right? So we made a high and it made a low. But where's the price trading in relation to the prior high, to the prior low? So we could do this on the 30, for example, on a 15-minute chart, or you could do it on a 30-minute chart. 30-minute chart compacts the price action a little bit and it shows you a lot. It gives you a bigger technical picture than a smaller time frame. So I always use a little bit higher time frames when I do my analysis. So I use the 30-minute charts, the 1-hour charts, the 4-hour charts, and then I dive into daily charts, weekly charts. I'm a day trader and I'm a swing trader as well. So I use the same levels for my day trading and for my swing trading. So that's really a great thing to do. So what do I mean by minor support, minor resistance? You see this pivot high right here. This is yesterday's high. So I'm going to mark it. And this pivot low right here is the low. But if you look at this level right here, we have another pivot high, right? So what does this mean? That if the price that broke out, when it comes back down to revisit the prior highs, so this prior resistance area becomes minor support. Because if we would have had a full completion into the bottom of this pivot, into the 414.89, you will not be so bullish as if you would be if it revisits a higher level that is deriving from a prior high. So you know what I'm saying? So this is the last shelves of support before a crash, where this is a confirmation that the price will start going higher. And that's why the price is going higher here. So whether you're day trading or swing trading, look for these really cool signs. You could trace them on your technical chart to make it easy for you if you're just starting off. And of course, if you're, let's say, a very small time frame trader, you know that any pullback into this level is going to be buyable. And then you're going to look for your strategy and say, okay, What are we going to trade here? Are we going to trade a pullback buy scenario? For example, a 5-minute buy or 5-minute rotation where the entry is 416, let's say 37 or 40, and we're going to use a stop at the bottom of this pivot. I always place the stops at the bottom of the pivot when I'm going long on any time frame, whether I'm day trading or swing trading or investing, because this is going to give me a really good solid point, and I usually give it a little bit more to the downside. So I'm including in my position sizing, I'm including the fleecing and that flakiness to the downside, so I don't get ticked out by algos. I hate that. And of course, it's inevitable, and sometimes they're there to get you because they know where your orders are. And then here is the entry. Basically, you're looking for a target, and when I'm considering target, I'm going by the same pivots. I'm going by the same pivot highs and pivot lows. So this would be a target 1 because we have a prior pivot high, and I also use pivot points. I love to use pivot points. I use them in day trading. They're not really helpful in swing trading, but in day trading, they're very helpful. And then, of course, you're going to go for another target into these highs right here. So this is the way I look at technical charts, whether it's a small time frame or whether it is a really wide time frame, or a really high time frame. But you can see here that following the pre-pandemic high and the pandemic low, we started to move higher. I am expecting at least a sideways range at this level before we start making another leg higher. The reality is that if we continue higher, the market is not going to offer us other entry opportunities. It's definitely going to be day tradable. But for long term, if you haven't got in back, let's say at least at on a daily spectrum, whether it was this rotation that happened, whether it was this breakout that happened here and it offered us this nice pullback to the 10 exponential moving average, and the rotation that took the price higher, because the market is actually extending now from this really tiny pullback to the 10 EMA. And we know since 2017, when the market started to go ballistic, and 2017, by the way, was the least volatile year, and the market kept on going higher and higher and higher, the 10 exponential moving average was our best friend, because any pullback into that 10 exponential moving average was viable. So I use very simple indicators on my chart. I just use the 10 exponential moving average, and then I use the 20, the 50, and the 200. These are simple moving averages, and this is all I use. So very basic, very simple charts, not a lot of indicators. Price is king, and it's king for a reason.
Beautifully said, and thank you for addressing the indicators you're using. In addition to that, I believe you were also using the Fibonacci retracement, right?
I did use the Fibonacci retracement. What I do, let me just get rid of these. Okay. All right, here we go. All right, so what I like to do, I like to look at the macro level. So for example, if I'm in a swing trade, I want to know where's it going to go to? I want to know if it extends beyond all-time highs, where is it going to move into? Because institutions do they calculate all their steps, and they know exactly where they can expect to sell partials or to sell or to dump. So in this particular case, I always go far out to the monthly, and I go to my fibs. And what I do is I connect the swing high to the swing low to get the projection for higher. So now I know that I'm running higher on a monthly basis. So we are into resistance on a monthly basis, but we can extend higher. Another thing that I'm using, so I'm using multiple time frames to determine my projection areas. And I'm also using it from the daily. So I'm going to go to the daily very quickly here. So I have another from the swing standpoint, that is more core standpoint, core meaning long-term. So I'm always doing pivot high to pivot low on the daily, and especially, and we have the trend, right? So we have We have resistance. We have resistance here. So we have rising tops and we have rising bottoms. So I'm going to go back to my recent swing high and low, and and I'm going to connect the most recent swing high to swing low right here to determine the swing trade potential targets. And we have a target right here that is into the 420. All right. So this is the next target that we're going to be looking for into the SPY. So we may not really get a pullback until we reach this area, or we start accelerating into this level right here. But it's very interesting because having these levels are going to help you so much, especially when you're trading into new all-time highs and you don't have any other reference points. One other thing is that I'm typically using this kind of indicator. It's not always when I don't have new highs. But I'm also using this indicator if the distance between my resistance point and the next resistance point is really far out and I have a huge tradable void. I don't have any pivots to the left-hand side that can predict where the price is going to run to or stall or reverse. I'm using these extensions as well because these are really great in assessing the new target levels that you would not see on any other from any other pivot high or pivot low.
And we get that question quite a bit, which is how do I target things when they're currently at all-time highs? I'm just looking into the clouds. That's what the extension is about.
Exactly.
Anka, thank you so much. We're getting people asking to have you as a regular guest on the show, which I personally would love. The context for the market, the look at the indexes using your indicators, everything in context is absolutely wonderful. Anka, if there's one thing that you can leave folks with on this trading Friday, options expiration day, what would that be? And where can folks find more from you if they want to continue learning with you?
Okay. Number one, always follow the trend. That is number one. Don't look for opportunities that are coming from pullbacks because pullbacks do not have really predictable targets. And in a very strong ongoing market, it could take your stop out and it could start rallying higher. And that's one of the reasons the market is just screaming higher because there are a lot of individuals that keep on shorting the market. And if you guys want to get a hold of me, I am on Twitter, Trade Out Loud. I do post a lot of ideas. Typically, I use Sundays and Mondays to post a plethora of swing trading ideas that I do. And I post them before they happen. So if you guys want to get a hold of me there, and my website is tradeoutloud.com. So thanks so much, Neil, for having me today.
It's been a pleasure. You have a great weekend, Anka. Thank you.
Thank you, Neil. Thanks so much.
All right, guys, Trade Out Loud with Anka Metcalf. I'm dropping the link. I'm not sure if producer AP's got it. He might actually have started using that potty that we got him for him and Luke, the little twin potty. It's so cute, you guys. You really got to see it. It's adorable. So we've got the Trade Out Loud URL to the website, and then it's just at Trade Out Loud on Twitter. We've got a little bit of time left in the show. So I want to show you guys a couple things. Number one is go to the website, Trade Out Loud. Anka's amazing. If we're going to get her back on the show, you got to go to the website. All right. Let's give her that spike in traffic. Give her the Benzinga hug of death. All right. And then another thing that I want to share, we've got a new YouTube channel. We were getting requests from the community saying, I don't want to hear Neil talk about potties and booties. He clearly has a fixation all the time. Before I get to the meat of the trade in your videos, I want just the goods. Just give me the good stuff, man. We've heard you loud and clear, and we have created a new channel, Benzinga Clips. Everyone right now, take 1 minute, go to Benzinga Clips. I'm going to drop the link in the chat, but you can also easily find it on YouTube, and subscribe. This is where you'll get nugget-sized little Chick-fil-A little morsels of chicken. If you don't want the whole sandwich, you get the little piece of chicken. All right, go here, subscribe. This is where you get the little things. Boot with the fur, or I'm out. Yes, you will get the boots with the fur if, number one, Here's the plan to succeed. For number one, I'm just going to give you a minute. Get on over there, subscribe, please. Pretty please. Thank you. You guys rule. Number two, if you want the boots with the fur, I need you to tweet at this guy. Do you guys know this face? You recognize that guy? Yeah, if you've been around here a long time, you know this guy. All right. At Story Investors, tweet at him and say, we want Get Technical on clips. Get it going. And say hashtag Benzinga or something. I don't know. Make a thing happen. All right. That's the face behind the Clips channel. He's been doing a great job, guys. Mitch, this whole YouTube thing that Benzinga has been doing is Mitch's work. That's Mitch Hodge. At Story Investors. Make sure you give him a follow if you haven't. So get on over to Benzinga Clips. What do we want to do next, guys? We got time for some more tickers, so let's get on over to it. Make sure you're hitting the like, please, because if you like this video, I could have fun with you on a Saturday when we get to put together our watch list for the week. It's pretty sick. At any rate, going back to my twit. Going back to my Twitter list that you guys tweeted at me this morning that you want to look at. Not Sven Henrik. Follow this guy. He's something else. All right, where's the list? Where's the damn list? There's a picture of me. Here we go. Here's the list. Where did we leave off? Our RASF EXP I. All right. Now we zoom in a bit. Boomers can see it. All right, guys. Take some time this weekend and make sure you stop by CVS and get a new pair of bifocals so you can read my charts. It's starting to get kind of hard with everything being so chunky. Okay, so TTCF. Tattooed Chef. This is one I've never looked at. Removing the moving averages. Drawing this out a little bit. Let's just look at price. Look at that broad base. Sheesh. Tattooed Chef. What is this? Is this like they send you meals kind of thing? What's Tattooed Chef? Plant-based food company that offers source. All right, it's food for hipsters. Got it. All right, so we've got some multi touch point support right here. Let's go ahead and get that in. It's funny, these stocks always come up like just as they're touching this support. So I guess the question is it going to bounce? You'll know when it does, is my answer. So when you're looking at a stock like this, that's absolutely at its point of support. You want to see a green candle in the opposite direction and the formation of some type of reversal pattern, which right now you don't really have much of. But you can look for a couple things. Number one is, let me get my paintbrush, an identical or larger candle from the previous one, but green, thereby pointing in the opposite direction. That might just be your pivot. Another form of pivot is what you see right here, which is a red candle with a very high hammer, followed by another candle, but to the upside. These are like things that you really see in these V for Vendetta patterns that tend to indicate a very sharp V reversal. But it looks like the reversal's got to be pretty big because we're at this level of support. We don't want to get all the way back down to $14. So let's see what Fibonacci says. Going to this low. Fib says it could possibly go a little bit lower. There is the distinct possibility that we could be getting down to this consolidation area back in August, getting back down to what was resistance in November 3rd. And it's actually, this is a lower level of support that this wick hit. Look at this. So you've got sort of two levels. This is your immediate area of support, could drop down to 17. And with swing trading, it sounds so dumb, but it's just how it is. Like it's you don't have a reversal or you don't have a trade until it's confirmed that it's going in that direction. So which way is this going to go? No one knows. It might trade sideways for a little bit right here. But if we do get a clear indication of reversal with a pattern, which could be one of these, it could be your V for Vendetta, which is just a meme way of saying like a 2-candle reversal, like a tweezer bottom or something. You could get your double bottom. You could get a rounding bottom, which would take a while. You can get your inverse head and shoulders, or you can get your diamond pattern to reverse at the bottom. Right now, there's no clear pattern, so it's really tough to say. Let's pull up some other indicators. Just pull up the 50-day, well below the 50-day. So it's just not a healthy stock at the moment. Not doing great. And you could be, one way is if you're just a Bollinger Band person, Bollinger. You can say, well, it touched the mean, and I'm looking, or I touched the lower standard deviation, and I'm looking for it to return to the mean. Very well could do that. And that's if you're bullish on the stock for fundamental reasons, that's a way to time and target it. But one thing to note is that this thing is very steadily going down. We don't have any curl action on it. Okay, so next up, thank you, Josh, for the Tattooed Chef, TTCF. For me, it's just not the time to enter. It's just not the time. I like to see some confirmation. Do I give up a little bit of a percentage on that? Yes. But I can't watch the stock all day, so I don't want it to turn in the opposite direction and me lose money, because the feeling of missing out on a trade is a lot lighter on the soul than the feeling of losing thousands of dollars. All right. I'm not taking the bait. Square. LTR. PLTR. So previously with PLTR, on Get Technical, Neil said he didn't want to enter the stock until it had a close above the volume profile. A lot of people took that as don't buy Palantir. And with their ape-like mentality, their incel-like tweets, they attacked Neil with the full weight of mob mentality for not telling everyone to buy, thereby using his platform to pump the stock. But what did the stock do? It did get above the point of control and started to approach the 50-day moving average. So it was a buy for a day trade at that point. But what did it do when it hit the 50-day moving average? It got smacked right back down. Why? Because the 50-day moving average is another important point that is a selling point or a buying point for a lot of people. So this is about timing. This is not about conviction. I don't trade to make a statement. I don't do that. I do other things to make a statement. I have other causes that I care about that are more impactful for people in need. I don't trade to make a statement. I trade to make money. And it's all about timing. Yes, this was great for a day trade previously. But from a swing trading perspective, which is what I'm doing here, I would love to see what you might get. Let's do a little boxy. The meat of the trade. Go down here. What you might get at the halfway point. You might get a return to the halfway point if you see signs of a reversal. You're going to want to target the halfway point, which is basically this level of resistance at 23.97. This is to trade to make money, not make a statement or get high fives from your online friends. And then above that halfway point, you can target the 50-day moving average easily. But what you got to know is that if we look at Palantir, the congestion area or the traffic jams with our volume profile are something you need to watch, which is right about at 24.70. So I'll draw a line. You've got to watch that because anytime you get above or below it, that you've achieved something. So a break above that is going to be targeting that 50-day. A break above the 50-day is going to be targeting the neckline. A break above the neckline is going to be targeting So if you like the stock, that's how you time the trade, and that's how you pick points to sell and take profit. We bet Wall Street, thumbs down. All right, whatever, loser. All right, what's up, dude?
We got we're a couple minutes over. We got Benzinga Pro. They're debuting our brand new scanner, so I want to make sure people get over, be able to see that. Brand new
soapbox off. All right, guys, thank you so much for letting me unload some baggage on you today. Keep your eye on those cute little booties in the market because they gotta get spanked. I don't want that to be my thing. Don't put that on my gravestone. At any rate, happy Friday. Have a great weekend. Get out there and exercise, and stay tuned for the Benzinga Pro Showcase. We got a brand new feature that's great for traders of all types. So this has been Good Technical. I'm Neil Hamilton. Happy trading.